We absolutely took advantage of the price declines that took place over the last 3 months. That would be something we would always attempt to do. So we invested our cash. Our cash had gotten up to 9% in September, and we took it down to virtually zero. We ended up the year at 2%, but basically we were hard at work adding to existing positions and adding a few new names. We added to Kennedy Wilson, a great sort of real estate conglomerate developer that we've had high success with for a long time. We have high confidence in it. We took advantage of price coming down. We added to Metadata, which is a service company, a software company in the clinical trial space that has a great record. There had been some mild concerns about growth, and we took advantage of that. We also added to Manhattan Associates, which is a company helping retailers solve the Amazon problem. Coherent. Coherent is a market leader in display technologies. We're all familiar in displays, in our mobile phone, in TVs and everything. They have been a market leader. They have high margins. This is a wonderful company that we've owned in other accounts for some time, and we think the timing is excellent. We're taking advantage of the sort of disappointments at the moment as to where they are in their normal cyclical process. Lasers are growing at a very high rate in many, many areas, and some of the areas that they serve perhaps will have a double total addressable market in the next 3 or 4 years. LCI is a fantastic company in the component space in the RV industry, in the mobile home world. They have acquired many, many smaller companies. They have maintained very high returns on investment, and it is, I think, almost an ideal way to play this evolving leisure activity. It's usually disappointment. It's certainly the market, but usually a specific disappointment over some aspect of what's going on. When I look at what happens after a decline, high quality doesn't do the best out of the bottom, but it does well enough, and over the long term it does extraordinarily well. We love the compounding effect of these high quality companies. In the case of mobile homes, there are declining sales at the moment for the OEM end of things, which does back up and affect component manufacturing, of course. In the case of Coherent, it is a similar activity with cyclical declines. So we want to take advantage of those kinds of moments. These are perfect examples of something we hold near and dear, time arbitrage. We have the ability, because we're long-term investors, to look out. When the market is focused on the short term, we want to double down on looking at the long term. We think high quality is often a investment strategy for active managers. We would put ourselves in that bias. And we think we're entering into a period where active management will do very well. We have higher rates, we have higher volatility, we have lower stock market returns. This is virtually the ideal environment.